Welcome to the Tear Sheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tear Sheet Editor-in-Chief, Zach Miller. Joining me today on the podcast is Megan Knab, CEO and co-founder of Franklin, which helps businesses streamline their financial operations with Franklin's fiat and on-chain payroll, expense, and revenue management tools. Megan has held various positions within the fintech industry, including at Serotonin, DriveWealth, and Veriledger. She's also an accountant by trade and has been a CFO and helped build a mini crypto trading desk on Wall Street. Welcome, Megan.
Thanks so much for having me, Zach.
And as I mentioned in our sort of warm-up that, Tear Sheet as a media publication has, I would say, blockchain and that bridge between DeFi and TradeFi is, to me, one of the most exciting and ripe with potential evolutions of the financial services industry. And I think we've gotten burned before by kind of getting caught up in the hype, I think, as certain crypto prices rose. I'd like to start, first of all, and hear from your perspective, where you feel like you're building in this industry, right? You're trying to bring in customers, you've got product. I'm trying to curious, before we speak about Franklin directly, where you think we are sort of in the whole rollout or evolution of blockchain? It's the billion-dollar question. Sorry, it's such a wide and sweeping one, but I'd love for you to set the context for us.
Yes, multi-billion-dollar question now.
Correct. Trillions of dollars. Yeah, exactly.
Exactly. Yeah, I think that's a totally valid perspective to have, where crypto has been an asset class that's existed for a little over 10 years now, that has burned a lot of people. I think crypto assets have a kind of rep on the street as being akin to a digital gambling facility, a casino. And it's hard for a lot of people. It's
sort of like in sports betting arena, maybe?
Yes.
Yeah.
Right. There's a lot of use cases, right, around those especially we're talking right now, the day after the US election, Polymarket being a crypto native prediction platform. I
want to talk to you about that. Yeah.
Yes. So it makes sense that there are a lot of people that treat the crypto industry, blockchains in general, with sort of, gloved hands, right? There are, I think, a lot of questions about whether crypto is really found product market fit as a retail use case. There's some use cases I think we could point to. But what we're really excited about at Franklin, and what I've been excited about building products in this industry for a couple of years now, is the power that it has to transform financial services and the way that businesses interact together and create more efficiencies in the back office. So that's what I've been focusing on in my career since around 2017 now, so a couple of years.
I think it's fair to say you entered early enough where you'd be considered a pioneer.
Oh,
yeah. I'm going to throw the P word at you.
Okay.
Well, can you help us understand, I guess, what are some of those use cases? I don't think we've seen them yet, as you mentioned, particularly in retail arena, but say B2B or at the enterprise level. What are some of the things that you're excited about blockchain's capabilities there that maybe we couldn't do in using traditional financial services? Have we seen what those things are yet?
Yeah, I definitely think that there's early evidence of a couple of different areas where crypto and public blockchains have found product market fit. Initially, the reason why I got interested in blockchains, specifically Ethereum, was I was going to business school at night. I learned about Ethereum then, but simultaneously, I actually uncovered a accounting fraud that was happening at the company that I was working with, that had been covered up for years, hidden within our accounting infrastructure. People within the company had covered it up. And it just sort of came to the surface, through a budgeting process. And for myself, being kind of young and green and frustrated with the corporate overlords that I was working for at the time, thought that public blockchains had this power to create an open financial system. And whether or not that's true, I think remains to be seen. But that's what got me excited about this industry in the first place. For myself, started up Franklin 2.5 years ago, and it was really born out of the real world experience that I had, and I know that others have had, operating a Web3 back office. So you have a multi-currency balance sheet. You have revenue coming in through banking rails. You have it coming in stable coins. And, the company that I was at, Serotonin, started off, 10, 12 people. We grew it to over 60, global team. It was during the pandemic, so remote work was a priority. A lot of very young, talented tech workers wanting to be able to go all over the world and really questioning, why do we have to wait 2 weeks to get a paycheck? Why am I giving this company an interest-free loan on my time? And it was really, very interesting sort of like issue to grapple with as the person, sitting behind the curtain, pushing all the buttons, trying to make sure that all of the money was in the right place on payday so that everybody got paid on time. I think that anybody who's used payroll software in the last 10 years or so knows it can be an antiquated experience. There's a lot of room for improvement on the UX side, on the money movement side, and that's really where we think stablecoins can come in as this transformative technology that can really leapfrog, current innovation. So that's why we started up. I think that it's one of the areas that has the clearest product market fit in the crypto industry, and we're excited to be a part of it and be building in that space.
Well, I think what's really interesting about you is you hit on two things. One was the Web3, and the Web3 specific needs. The second is modern payroll. We've had a few of the modern payroll providers here on the podcast, the Gustos of this world, and they are building, very, compared to old school, very innovative services with a modern infrastructure that can redefine, I guess, that relationship between, an employer and an employee. So you combine both of those. And so I guess you started to say this in your answer, like what are specific needs of Web3 companies that you're building for? You mentioned the ability to handle, both on-chain, multiple currencies, on-chain and off. Are there other things that are unique to Web3 companies that you've built into the product?
Yes, definitely. So the multi-currency aspect is important for companies in Web3. Most have exposure to stable coins, but they're operating in the real world, right? They have real bills to pay in fiat and need to be able to move in between those currencies pretty seamlessly and cheaply. So that is certainly an important thing that Franklin does to be able to be responsive to the needs of our customers. Another thing, which seems simple when we were talking about the TradFi world, but has been so far lacking in the Web3 world specifically, is the emphasis on tax compliance. So there have been, a number of rules in the United States specifically, as well as certainly we could go through a bunch of different jurisdictions about how to treat crypto assets, how you think about reporting them. And so having that kind of tax compliance and built into the system where when you're paying a contractor, a W-2 employee, to make sure that you're looking at their local, state, federal requirements for those payments and rippling that through the payments infrastructure like you would expect from any sort of modern payroll system. So that's another sort of key feature that I think differentiates us when looking at some of the Web3 native tools out there.
And the tax jurisdictions at this point, are you focused just on U.S.? Do you include some outside geographies?
We're still a young company.
Just getting U.S. is a huge issue from what I understand.
Yeah. The U.S. has something like over 675, I think, different sort of
Louisiana has codes. 100, I've read, or something like that.
Yeah, right. Like Hawaii is quite an interesting place when you start really double clicking into this. We have been primarily focused on the U.S., and part of that is because it's just the market where we are. So I'm based in New York. I have a lot of founder friends that are here in New York, and it was a great place to launch into. But it's not.
That sounds like a company in and of itself. Just getting tax compliance down. That's a component of what Franklin's offering, but that sounds like a massive undertaking.
Yeah, I think when you start up a company, you're a little glassy-eyed and excited at the prospect, and then you start digging into what it will really take. New
relationship energy, yeah.
It's a non-trivial issue. And I think when we look at the history of payroll companies in the United States, the way that they would expand was on a state-by-state basis. And this is really how a lot of payroll companies still work on expanding. So, if you want to launch a PEO or EOR offering, a lot of companies will just start by getting licensed in the states that they have workers in. And then it's like, okay, somebody wants to hire someone in Wyoming. I guess we need to go get licensed in Wyoming. So it's quite a decentralized infrastructure. And for a payroll company to be competitive now, you have to launch on a national basis.
Right.
And so making sure that we could check all those boxes from the beginning was something that was very important to us, but it was also a non-trivial issue. So yeah.
Yeah, and you mentioned early wage access as well. Like, like why should employees give an interest-free loan to their employer? But even EWA, like I know we've written quite a lot on the emerging jurisdictions. Every state has different sort of approach to that. Yeah. Is EWA something you provide support for within Franklin, or were you just making an example?
We have a little bit of a contrarian take to earned wage access, I would say.
Oh, I'd love to hear that.
And part of it, we find ourselves that we're kind of the odd man out in many of the rooms that we walk into. We walk into a payroll industry association room and we're the weird crypto people. We walk into a Web3 native room and we're the weird tax compliant people. Right. For earned wage access, what a lot of payroll companies do is they're essentially creating complex loan agreements between themselves and the business and even the end worker in some cases, and it's quite expensive. There are payroll companies that offer daily pay as an example, and it is sort of, in my opinion, in the opinion of Franklin, a kind of new age of payday lenders. And for us, we think that the ability to move money faster is really a key unlock here and is different than earned wage access. So, our customers can use fiat, they can use crypto, but they're also able to use stablecoins under the hood without ever having to interact with crypto if they don't want to just facilitate faster pay cycles, more frequent pay periods. And we think that this is one of the things that is a leapfrog technology. There's no need to create loan agreements if you can just be moving money faster. We see this across the industry. I've listened to your podcast. I know we talked about FedNow, RTP. We see it in the equities industry with moving from T3 to T2, now to T1, right? This is something that I worked on when I was working in the equities industry as well. And it should apply to the payroll industry as well. And we think that stablecoins are the key unlock there. So it's maybe a controversial take on earned wage access, but that's
I think it's a fair one too, and I appreciate that. I'm curious about Franklin, your clients today, and sort of where you're going to head. Are these totally native Web3 companies, or my feel is sort of like the real market eventually will be this sort of the crossover between traditional and whatever, however you want to call it, terminology you want to use, that bridge. I think DeFi has a lot of potential, obviously, but regulatory compliance fitting into the existing world, there's such a disconnect there. So I kind of see, at least in the short term, those bridging technologies that bridge between both worlds. Are your customers today those types of companies? Who are you marketing to today, and who's your future customer?
Yeah, so when we launched our platform a year and a half ago or so, we went directly to the Web3 market. We had known just from user research and things like that there was an immediate need to be able to have this hybrid fiat and crypto kind of payroll system. As we've grown, though, I have been surprised at the kinds of customers that we've been attracting, and they fall into a couple of buckets. Certainly Web3 companies, and they have a nexus in the United States. That's our bread and butter. It is a small market that has grown quite a bit just since even we incorporated the company a few years ago. But more and more, we see companies that are just looking for more flexibility. So that includes companies that are looking for more remote first options. So you want to build out a team, you want to hire your first workers, you want to be able to do international remittances without all of the overhead of FX costs. That's a great use case for us. Another use case that's been emerging are gig economy employers. So, you're a construction company, you're a nursing staffing company, and you have workforces that want to be paid on different pay schedules. They want to be paid same day. That's also a use case that we can help support. That wasn't something that we initially thought about at all when we were starting up the company. But again, it goes back to this idea, there's a lot of unlock that can happen when you are able to move money faster. And so I think we're still scratching the surface around these kinds of industries, but those are our primary markets that we have been working with.
And when you do help firms onboard and pay, say, international workers, remote workers, do you work like some of the other companies, those deal-like firms that create local infrastructure companies and pay the employees through those local companies?
Right.
Yeah.
Yeah, so at this time, we're not an international PEO, but we do, that being said, we do look at the jurisdictional regulations for wherever payouts are happening. So unlike some DeFi platforms that you might see on the street, like everything gets checked that comes in through Franklin. Every business goes through a compliance check. Every worker that gets paid through Franklin has a KYC check. And we do a tax regulation check as well. And that is also like quite a proactive process. So if a government, has even put out a notice saying that they might not be amenable to accepting crypto as part of their internal, economy, we will not service that jurisdiction. So it's a pretty conservative approach that we take for international remittances. But that being said, there are a bunch of jurisdictions out there that we've seen this pick up with as a pretty popular product.
Got it. And having had experience working on both sides of the aisle, do you imagine and when traditional financial institutions getting more serious about blockchain? Because for right now, it still feels like there's a lot of experimentation that comes on. Up until generative AI kind of burst onto the scene about a year ago, at least from our perspective. Now everybody wants to talk about Gen AI. Like there hasn't been a podcast over the past year that we don't talk about that, because that's in the zeitgeist right now. But before that, it was blockchain. But blockchain was always something sort of, we've got a special group that's working on it and testing stuff. It still felt like very exploratory. What would it take for large institutions to get more serious about this industry?
It's a great question. I think, working in the crypto industry for a couple of years, it's always been a mantra from institutional investors, and even just some of the larger sort of startups, that the institutions are coming. And, here we are in 2024, and are the institutions here or not?
Well, we had the ETFs launch, I guess, which did that have any impact though? I mean, that's a tradable asset. Just liquidity.
I think that it is, Ethereum ETFs, Bitcoin ETFs are interesting because it puts crypto assets on TradFi rails and gives more sort of traditional retail investors or institutions a safer option. What would be really cool is if we had ETFs on Ethereum, where you have these tokenized asset classes that can move faster, they can move more transparently. Like that would be interesting to me more so, but also a little bit more extreme. I think that there's been a lot of experimentation. So, I'm a part of this trade organization called the Ethereum Enterprise Alliance, which is really just a safe space for brands, enterprises to get together and kind of think creatively about what are the use cases that we could think about experimenting with. But there are some large barriers, especially if you are a highly regulated financial institution like JP Morgan or something like that. One is the question of private versus public blockchain. If you are operating on a public blockchain, you are putting a lot of transaction information out there for public consumption, and rightly so. A lot of financial institutions are uncomfortable with that. There was, when I was working at DriveWealth, an initiative that Paxos had started to be able to settle trades on-chain, on a public chain, and you can just see the order book. Right, that's like pretty fascinating, but also has a lot of downside risk, right? Private blockchains, you then have to sort of cede some of your information to perhaps your competitors, right, for interbank transfers. That's also unpalatable. And so I think the key unlock to see really like the big boys of finance take this technology seriously and actually integrate it into their stack instead of having it be sitting off in a R&D department, somewhere, on
over
the fifth
there.
floor, right? Yeah. Is having more privacy technology be available on chain. There are a lot of researchers working on this. There are a lot of startups working on this. It's something, that we have looked at Franklin to be able to execute payroll privately on chain. And privately doesn't mean suspiciously, right? You can still have compliant private transactions. And until we have that, I think that, we'll still be operating in a little bit of a silo in the financial services industry, and rightly so.
So that's interesting. You're talking about something that is public and on-chain, but you'd have some type of overlaying technology that would selectively disclose that information to different parties on the chain, right?
Exactly.
That's interesting. So
have.
How far are we, in terms of where you've seen, how far are we of finding things like that would make that palatable?
Yeah, I think, we have things like ZK snarks, right? This is like a privacy technology where through some very fancy math, you can disclose certain parts of a transaction without the whole transaction information and be sure that the transaction is legitimate. It's computationally quite expensive to execute on chain. So why pay all of this money to have a private transaction when you could just send a wire and you're still paying a bunch of money, but at least you're used to it. There's a big developers conference coming up. I think we'll see a lot of innovation in this space. It's hard to say, I think sometimes in the crypto industry, the developer community is highly vaunted. So the guys and girls working on infrastructure, working on new layer 2 technology, all that's really important. But for us at the application developer sort of layer, we really want to see a lot of this privacy technology. And I think if we double click into the Web3 industry, more application developers should be talking with these infrastructure developers as well.
Totally.
To get to a point where we can really get this technology in the hands of others. And that's not to poo-poo it. There's a lot of work. This industry is super nascent.
Yeah.
And so, we're getting there. Hard to pull out the crystal ball and say when it'll happen.
Totally. And at those developer conferences, do you see bankers on the floor? And people work for banks? Do they participate in these things? Yeah.
More and more so. Yeah. Certainly, we see people from the IRS there, which is quite interesting. But yeah, and I think that a lot of people.
We've also seen regulators, by the way, be more participative in tear sheet communities over the past 2 years. That's definitely something we've seen as well.
Yes, yeah. Hester Peirce, one of my favorite regulators in the industry, because she is so engaged with the community and really wants to get feedback. I think that's fantastic, and what this industry really needs, an important ingredient for success for sure. But I think that a lot of people working at banks too are personally interested in cutting edge technology and are excited by the potential use cases. And so the more we kind of mix and match, I think that's fantastic. You see too at some of like the biggest Web3 startups, a lot of former bankers, former people working on Wall Street and trading, and they bring a lot of that institutional knowledge, which I think is also super important.
Awesome. As we're getting to the end of our conversation, I'm curious, what do you have in the hopper for Franklin? End of the year, 2024, looking forward to 2025. What are some of your big audacious goals? Like what should we expect to hear from you guys?
Definitely. So a few months ago, we released products outside of just pure payroll. So we started off as a payroll company, and that is still core to who we are as a company and a product and the main use case for our users. But we noticed that a bunch of our users were using us plus other technologies like Request Network or Bill.com. And we really wanted to pick up the volume that they were using on these other services and also provide them with a better user experience to have a more consolidated financial stack. We will continue to expand there. We'll continue to expand in the terms of the currencies that we support as well as the jurisdictions that we support. And I think it's also been I know you've spoken with Mercury. We see it at Brex, we see it at Ramp. They are also working on putting more sort of these back office operation tools natively into their banking rails, which I think is fantastic. And I think the question for us, as well as for other companies that maybe integrate with those banking providers that are also releasing tools that may or may not be competitive, is how do we think about integrating such that the end user is having a really good user experience, that we're always staying true to that mission of moving money faster, moving it more cheaply, and making it easier to operate a business. So I think those are some of the things that we're focused on, as well as the questions that we're grappling with.
I wish you the best of luck at the end of this year and into next year, Megan Knab. Thanks for joining us on the Tearsheet Podcast.
Thank you for having me.